Good morning, we're looking at dollar CAD, and as you can see, didn't have a great day on Friday, but dollar CAD has had a second wind. It's held the 9 and the 21-day moving average. These are at 132.51. They're both together, obviously. They've converged. We've got the adaptive moving average coming in here at 132.41. So the market is looking quite perky, but we've got to break this 200-day moving average, and at the moment it just isn't doing it. You can see the way it's capping every single attempt at it, and it's done it 1, 2, 3, 4, 5 times now. So that's our breakout point, and that's around it is at 133.05. So unless we break above that 133 area, which can lead us on to 134, first of all 133.80, but unless we break through that 200-day moving average, the market is going to stay exactly where it's been staying. Now, the good thing is that it's actually been holding 38.2 moving average at Fibonacci. It's holding also the adaptive moving average. So there is support down at those lower levels. So for the moment, unless we make a break below that 132.50 area, so you've got to give it up to 30 points on the downside. So let's hazard a 132.25 to 20. Unless we break that, the market is going to stay within the range and should push higher. But even if it does, you are still taking your profits up at that 200-day moving average, which is here. Okay, so that's where you'll be taking profits. So what we're going to do, we're going to play the range again. We are range bound in currencies, but we're going to play that range. So that's the dollar CAD. Let's see whether or not we've got other currencies that we can look at. So let's drag up the dollar Swiss. As you know, we were short dollar Swiss all week. We got out of the close on Friday. We had a buy order in at 98.85. It went to 98.89. But we got out on the close and we got out at 99.06. So happy days on that one. Now, I can't see anything that has changed in dollar Swiss, so I think still, as we've been below that 200-day moving average, I think we still look to sell a bounce. And I see that bounce, if we have it today, and I'm looking at it around about 99.40, and if it gets up to 99.40, we can have a look at selling that. You can see the stochastics and the MACD, the MACD, and the RSI are all supporting a move lower, and it should come back to this area here. That's the 38.2, and that's coming in at 98.60. You've got quite a lot of support around there, and you've got the 55-day moving average coming in at 98.49. So I suggest that you cover shorts on a move to that level, and we are only looking to sell again if that breaks. But even so, you've got that 50% fib, which is got a lot of support now through previous highs. So I'd be very careful with the dollar Swiss selling it down here. I would much rather wait until it's had a little bounce. Let's see what it's going to do today. At the moment, it is looking under pressure. We're currently trading at 99.15, so it's above Friday's close, but it's still looking a little bit iffy. So I still think to sell into strength is the way forward on that one. So now we're going to take a look at dollar yen. So looking at dollar yen, you can see where it fell on Friday, and we hit that 23.6 at 107.50, and as you can see, the low was 107.52. But you didn't just have that, you had that low there, that low there, that high there. And if you scroll across, you can see where there was quite a bit of support down from previous lows, previous highs. So it's no surprise it just sort of coincided with the fact that it was a 23.6 fib. So now what? Well, we're below the 9-day moving average. We're below the adaptive moving average. We don't even want to look at the 200-day moving average because it's too far away. Far away in another galaxy. Anyway, you've got the 55 and the 21-day coming in at 107.28. Okay? So, and then you've got 107.14, 107.21. So you have got some support around those lower levels. Currently we're trading at 107.55. So we're trying to recoup, I think, some of the losses that you saw on Friday. But really, as I've said over and over again, this is a stock market move on the dollar yen. Dollar yen trades the same as S&P. So all you need to do is look and see what that one's doing, and then you can take a position on the dollar yen. If it does break 107.20 or 107.14, where can we go? You've got a lot of support again at 106.91. You've got all this around here. You know, it is quite a big area, and that comes in at 106.46. You've also got a trend line coming in there as well. You can't see on this system, I've got it on my other one. But you can see you've got a trend line coming in, and that's coming in at that 50% level as well. So all around here, you've got a lot of support, and it's unlikely at this point that the dollar yen can actually break below here. So look and see what these are all doing and saying. You can see the sharp moves towards the downside happened because of Thursday and Friday's action. So it could be a bit of a knee-jerk reaction there. But again, just keep your eye on it. Just watch and look and take notice of the levels that I'm telling you about. On the top side, you've got the 9-day moving average coming in at 108. You've got this line here, which is coming in at near as damn it 108. So from here to here would be a good selling area. We can sell up to here and then look and see what we do here. We cover our shorts. We're not looking a lot, 50 points. We can cover our shorts, and then you look to resell below here for a little test of this line and this here. But again, please keep your eye on the S&P because that is what is moving this market. Okay, good luck. I will catch you all in a bit.